Thank you for watching. This is Richard with Wisdom Investor, and today we have some exciting news on dividend-paying stocks and also ETF funds that pay dividends. And we had a question for one of our viewers said, should I invest in a dividend ETF or a dividend-paying individual stock? So we're going to look at that question here today. Again, I want to thank you for watching. Please leave your comments if you have any comments on individual stock dividends or ETF investing for dividends. Both of these are excellent methods to use to build a nest egg for retirement. And we're going to look at some of the advantages of doing both of these methods. So I want to thank you for watching. And first, let's just talk about the definition of ETF. It's exchange traded fund. They're very much like mutual funds, but they are invested like stocks. You can buy them and sell them and during the day, just like you can a individual stock. So we're going to talk about ETFs versus buying your own stocks and managing them yourself. And so a couple of advantages here of investing in dividend-paying stocks or ETFs. Shareholders and investors that accumulate a portfolio of dividend-paying stocks or ETF funds over many years will build up a large number of shares. So you're going to be building up a large number of shares from the dividends that they pay you and from what you've already invested yourself. If those dividends are reinvested, they continue to grow just like the stock. As years go by, your $50 dividend income will expand to $100, then grow to $1,000 or more. It will accumulate. Those dividends that are paid out will grow into more equity in your stock or ETF if the dividend is reinvested. So we're going to talk about some of the advantages here of dividend ETFs. Okay, so one advantage with a dividend ETF is that individual stocks take more time in managing and monitoring. We're going to look at a chart over here, and here's a chart of a ETF that we're going to talk about, and this is a Schwab US Dividend Equity ETF. Trades just like a stock here. You can see the price. The ETF here is made up of 50 or more stocks, okay, versus an individual stock. We're going to look at an individual stock. Here's, for example, AT&T. It pays a dividend, and you can invest into AT&T. Now, one of the advantages with the ETFs, it invests in 50 or more companies. So it does all the investing for you, and you don't have to monitor all of these different stocks. And so in this case, this one, consumer defensive stocks invest 23.7% of this fund is consumer defensive stocks, industrials, technology, consumer cyclicals, and healthcare, and so on. So that's an advantage of the ETF. It does all the monitoring for you, and all you have to do is just invest in the fund. Okay, so let's take a look at another advantage here. It's diversified. Now, we talked about that just a second ago. Invest in many different areas. Many of the ETF funds will invest in 50 companies or more, and if one individual company drops dramatically in price, this will not hurt you. Okay, so let's just take a look at this fund again. Again, we talked about it's going to be diversified. If one of these stocks in this particular fund ends up dropping or just having a bad year, it's not going to materially affect your fund for the most part. Okay, let's go over here and look at individual stocks. Maybe you have 4 or 5 stocks, okay, and you have a stock that's going up, that's doing fine, that's doing great. Maybe one of the stocks is coming down pretty hard, like this one here, and that can affect, especially if you have just a few number of stocks, that could affect your overall return that you're getting individually. So these ETFs, you don't have to worry about one stock really hurting you. Okay, so that's an advantage. Okay, so let's look at number 3 here. There is less time in analyzing which stock you should add additional money to your portfolio. So we're going to go back to our stocks here. So if you have multiple stocks here that you're investing in, you come up, you have an extra couple $100, you have to determine, well, which one of these do I want to invest in? And the ETF does that for you. They automatically make those decisions for you. So it makes it easier to manage. More advantageous to a small investor. Okay, so back over to our ETF fund here. Typically, it could be $2,000 to $3,000 to get started. Okay, so you immediately get started with a portfolio of funds that's working, or companies that are working for you for a couple $1,000s. Now, you can invest in a stock for a couple $1,000s, but you definitely don't have that diversification. Okay, so number 5, less commissions. Now, if you're going to develop a portfolio of stocks, you're going to have to individually buy each one of these companies here, each one of these stocks. And of course, each time you do that, you're buying commissions. Now, I've seen people who have 20 to 30 stocks, and they're probably proficient at what they're doing. I've seen some people who have 100 stocks. And first of all, I don't know if most people can manage that many, or if they would have the time to be able to stay on top of that many funds, and let alone the cost for investing in all of those stocks. So we're talking about some of the advantages of the ETF. Stock market risk may be less. Okay, now there is stock market risk in the ETF funds. They can come down, but if you have a diversified portfolio here, you may not have the risk to the downside quite as severe as if you had just a few of these stocks. If you have 1 or 2 stocks going up, and then you have that are, say, up 5 or 10, let's say 10%, and then you have a stock that's down 20%, that can affect your investment return pretty severely. Of course, the goal with stocks, individual stocks, would be to have at least a dozen stocks so that you can diversify in various sectors with your stocks. Advantages of buying in individual stocks. You can customize. Okay, this could be a extremely good advantage for individual stocks. Now, in this case, we're looking at General Mills. That's packaged and processed products. It's had a nice return of 4.57%. And then these are consumer goods. Maybe you want to target the healthcare area. Okay, so you can choose a few stocks in the healthcare area. Maybe you feel like the utilities area is an area you want to target. And then here we have telecommunications. So when you buy individual stocks, you can pick and choose the areas. If you have a stock that is not performing, you can eliminate that stock from your portfolio. Now, on the ETF funds, if you want to make a change, of course, you're not going to be able to do that. You're going to have to invest in that particular strategy that particular fund has. Now, one thing I will say is you can look at some of these ETFs and determine whether you want to invest in an ETF by the sectors that it invests with. Now, here we have consumer, defensive, and industrials at a higher percentage. This next one here has real estate and utilities. Okay, this next one here is energy shares are higher in healthcare. So we can analyze some of these ETF funds and try to target them. But with individual stocks, you can definitely target exactly where you want to be and take out the stocks that aren't performing. You can change a stock in your portfolio if you feel it is not performing. We just talked about that. Higher total return can be achieved. Now, typically with the individual stocks, you can get a higher return and maybe even a higher dividend yield. Okay? The ETF funds, because they're investing in a large number of stocks, those returns become you get an average, and so that average of a lot of stocks typically is not going to be as big as fewer number of stocks, especially if they're performing well. Now, of course, if your particular stocks that you picked aren't doing so well, then of course you may not have as good a return. Okay, summary. There are advantages and disadvantages to both strategies. The most important thing is to get started. So if you're thinking about developing a long-term plan, investing in dividend-paying stocks or ETFs, get started, okay? Start with if you're new, you may want to start with the ETF strategy, okay? So for a few $1,000s, or depending on what you have, you can get started. You immediately have a diversified portfolio. If you're a person that has the time and the experience with stocks and you enjoy that, you have the know-how, then investing in stocks could work for you. If you're going to spend the time investing or in researching what stocks to invest in, then maybe the individual stock method would be the best way. But the big picture is dividend growth investing is an excellent long-term strategy that will help you build your retirement nest egg. So that's our video here for today. I want to thank you for watching. Yes, definitely dividend investing is an outstanding way to build your nest egg for retirement. So biggest thing is to get started. Do a little research into the area that you want to invest in. Maybe do you want to use individual stocks, or do you want to use the ETF funds? Do what you feel like is comfortable for you in this particular area. But I want to thank you for watching. Stay tuned for more videos from our video site here at Wisdom Investor.